Lovely. Starting. Yay. All right, receiving your content. We should be live right about now. Hey everyone, it's like 2 minutes. 2 minutes to 9 o'clock. Yay. All right, so here we are. Just getting started. Hey everyone, this is James coming to you from Sarasota, Florida, where it's warm, sunny, delightful all the time. So let's get us started. Today's date is Tuesday, November 29th, 2016, 8:58 p.m. All right, so we get out of here. I'm going to move on over to our Thinkorswim. Oh, look at that. My year-to-date profit has dropped down to 16,000. Why is that? Well, look at this. Most of these positions that I have right now, the big negative $25,000. Yay! So, anyway, see, not everyone wins, you know? Anyway. If you think about it, 16% for the year, and we're only into November, it's not that bad. You know, it's better than some other ones. Okay, so let's take a look at what's coming up. We'll go over some of these a little bit later, but right at the moment, we want to see what's coming up. Okay, today is the 29th. These are all the companies, 89 of them, that had dividends today. Or their EX date was today. Okay, all these guys. And I have it arranged from high to low, I believe. Now, let's do this again. So we go from high to low. That's low. All right, there you go. High to low. Because once you get down, think about it, 89 of them, I don't even want to look at something that's below 10 cents. So all these companies from here down, all these guys, I don't want to look at those. You know, 9 cents, 7 cents, 6 cents, 5 cents, 4 cents, 2 cents. No thanks. So let's go back and look at the ones that are paying the highest dividends. Now, the absolute highest, I don't know if I really want to do those. But let's get more information on LMT. Is that Lifetime Memories, I think? I'm not 100% sure. But over to the quick charts. Now, if today's the 29th, that means 10 days prior to today would be the 15th. Okay, so you would had to have been out, or had to have been in yesterday. So you would have got this notice on the 14th. Okay? So what we're going to look at the opening price on the 14th and see how it's reacted. That would give you an idea of, had you gotten in any of these 10 days ago, this is what you would have gotten. Now, we all can agree that if today is the 29th, you would have had bought it yesterday, and 10 days from yesterday would have been the 14th. That's the number we're going to use. The 14th is right here. Okay, so with a dividend of $1.82. Okay, now here's the opening price here, and here's the high. Those are the numbers we want to keep track of. Okay, so the opening was 261, and the high for the day was 267. So if you got that one, you would have got out on the same day. If you had jumped in with a what do you call that? A trailing stop. Okay, depending on where you had your stop set at, you could have made a nice little move on that one. Okay, so LTM would have done it on the first day. ATRI. Again, we're going to look at the 14th. 14th is right there. Okay, don't even have to bother looking because she starts out at, wow, that's a high price stock, $4.55. Tell you the truth, I wouldn't have got into it. I don't do stocks higher than $100. Only because I really don't want to get stuck with them and the leverage is not the same. Even though the returns are going to be the same percentage-wise, 1% of $100 is, $1. 1% of a $10 stock is, 10 cents? Whatever. 1% is 1%, 10% is 10%. It's all basically the same. I just don't want to pay, $489 for a share. But if you did get into them, you see the opening of the day was $4.55, and the high of the day is 464. That's a $9 move just in one day. And where did it peak today? 503. That's a nice move. Anyway, McDonald's, MCD. Quick chart, we're looking at a 94-cent move on the 14th. 14th right here. The opening was 114. The high of the day was 118. That's almost a $4 move. Yeah, I think I would have made that 8.94 cents the same day. All right, MAN. More on MAN. Oops, quick charts. Looking at an 86-cent move. 86 cents on the 14th. Okay, the 14th right here. The opening is 84.29. The high of the day is 85.82. That's $1.50, $1.60, somewhere in that area. Yeah, I think it made that on the very same day. So each one of these so far is first day. So SAFT. Quick chart. 14th. 11th. Ooh, look at this one. This is a good one right here. Okay, so the 14th. Opening of 71.35, and the high of the day was 71.95. That's only a 60-cent move. So this one would not have made it. So this just goes to show you it doesn't work all the time. So let's take a look at some of the other parameters before we decided whether we would have gotten that or not. So let's look at the big picture for the whole year. Okay, so the low is down here, and the high is up here. Okay, so it looks good, it has a nice movement. Now let's isolate the last 90 days. That's the last 60 days, isn't it? Okay, let's go back just a little bit. Last 90 days would be right here, so September. Okay, so it's going sideways and it makes a big jump. All right, so most likely everything looks good. The high is way up here. So more than likely, let's go back and isolate that. Get away from the 14th, because we would have got in at the opening of the 14th. This is what we would have seen. Okay, now, to be totally honest with you, if I had seen this and thinking to myself, all right, this thing's going to pay dividends in 10 days, I should get in first thing in the morning. Now, I always tell people, when I'm investing, I don't want to be down here at the low. That's kind of like being in the basement, digging a hole in the basement. You know, I really don't want to be the rock bottom. And I definitely do not want to be up here, where you're standing on a ladder reaching for the skies. So more than likely, that is one I'm going to have to toss up. And I'm going to show you one more trick, one more thing I'm going to look at before I actually say whether or not I would have done it. Because right here, that's the high for the year. Do I really want to get into a stock looking for a 70-cent move at the high of the year? Not really. But let's look at one more chart just to see what we're looking at. Now, seasonality, this is going to show you what the stock normally does on a seasonal basis. You know, every year it does basically the same move, so let's see what that looks like. All right, here's where we get a little iffy. Here's where we are now. And what's it going to do for the rest of the year? Hypothetically speaking, if it continues on its average, it's going to go side. See, here's the line. This is for this year, and this is traditionally what it does. Okay, the beginning of the fourth quarter, it moves up, drops down a little bit, goes sideways, dips, and then it makes a nice move up. Okay, we're right here. Okay, this is today. All right, 10 days ago, the 14th, would have been right about here. Now, see, that's iffy, because if you're looking down here, you're going to jump into a stock, and it's going to go sideways for 2 or 3 weeks, make a dip, and then make a recovery. Do you really want to do that? That's an iffy one. That's going to be a judgment call. I honestly cannot say whether or not I would have done that, because I don't want to play Monday morning quarterback or Tuesday morning quarterback. Anyway, don't want to play Monday morning quarterback where I say, had I did it this way, I would have won. No, I'm not going to do that to you. I'm going to give you my honest opinion. Looking at it from right here, okay, 14th is right there. This is what I would have been looking at. Okay, going sideways, sideways, sideways. This is the high of the year. What I got in it, knowing that it's going to continue going sideways, then take a dip? Probably not. Okay, that being said, let's get back to where we were. Right there, back to standards. And look at CMP. CMP, more data. Come on. And there we go, CMP on the 14th. Okay, CMP looking for another 70-cent move. CMP's right here. The opening for that was 75.15. The high of the day was 76.55. That is that's over $1.25 or $1.40, something like that. So yeah, that one made it. HD, Home Depot. 11th, 12th, 14th. Okay, so here we have that scenario again. I'm not going to say whether we've done it or not. Let's take a look. Okay, Home Depot, looking at 69 cents dividend movement. Okay, here's the 14th. The opening is 130.50. The high is 130.64. That's a 14-cent move. Didn't make the 69. However, what are we looking at? 130.50 and 70 cents is 131.20. That's the number we're looking for. So we would have held it for 1, 2, 3, 4, 5, 6 days. You would have been all right there, 131.28, because you would have hit your 131.20 on the 6th day. 6 days is not bad to hit your target, but would you have gotten into it? I don't know. Let's take a quick look. We all love Home Depot. Okay. Quickly looking at the 1-year chart, you got your low down here and you have your high way up here. The price right now is right in there, so all that looks good. The last 90 days, right to there. Okay. Wait a second. Oh, we'll go over just 1 day. All right, there we go. See, this is the 11th. So the very next trading day would have been the 14th, 12th, 13th. Yeah, would be the 14th. Would have been a Monday. Anyway, this I don't like. See how it's going down? But what I do like is hitting here and looking at the blue lines in the background. See these blue lines in the background? That's volume. Volume is picking up. See, stock is dropping, dropping, dropping. All this volume accumulating, and then it shoots up. So would I have gotten into this one? I'm going to be honest with you. Yes, I would have. Number one, it's Home Depot. Number two, they've been paying on a dividend and increasing their dividend for over 50 years. They're in one of the dividend kings, increasing dividends every year consistently for a minimum of 50 years. So yes, I would have gotten into Home Depot. Okay, and then depending on where I have my stops set, who knows if I would have continued on holding on to it. See, the next day is a down day. Okay, I would have gotten in at the opening, which would have been 130.50. My target would have been 131.20. Okay, I would have held it for 1 day. I would have held it again. Okay, green, I would have held it, held it, and then I would have been out. Okay, now the reason I say that, if I go 4 or 5 days in the red, I'm out. But this one didn't do that. Let's isolate it. Okay, here's the 14th here. got in at the opening, which is up here. The very next day was another down day. Okay, not a huge move, but what I know, it moves consistently. Well, you know what? Just for the fun of it, let's pull it up. Right here. Let's put in Home Depot. All right, here we go. Now look at that. Look at those numbers. 1.1, 1.2, 1.2. That's pretty close to a 1. All right. The average. Let's get rid of the 2000. That number. Let's go to the average. Look at his. Down here comes up to the blue. Comes up to the red dots, which is the dividend line, and then it just continues on up. Okay. That is a definite no-brainer. Would have gotten that one. Okay. Home Depot. Let's put HD into here. Home Depot into here, and go. All right. Again, look at this. Look how close you are to ones. Okay, 1, 1.1, 1.1. The 52-week high is 139. The 52-week low is 109. And look where it is now. It's 130. I like that number right in there. As a 1-year target of 146. The dividend is 70 cents. The yield, if I'm stuck holding it, is 2.1, which is better than most banks are offering, and it's 5 million shares on an average flow. So yeah, everything is pointing that direction. Now let's take a look at what the 10-year chart looks like from Yahoo Finance. Okay, Yahoo Finance, 10 years. Look at that. I love that. 10 years ago, it was way down here at $40. Now it's at $130. Like I told you, Home Depot, no-brainer. And where are we? We are back here. And I would have held on to it for 6 days and made my target price. Okay? And now if I had a stop loss, let's see what would have happened. Just for the fun of it, you know. Would have made my target in 6 days at the 131.20. Okay, hit 131. The high of the day was 131.30. Okay. And she opened up at 131.99. Wait a minute, she opened up at 131.36, which is still higher. It's another 16 cents. It made a high of the day for 131.99. Okay. And look at that. It peaked out at 132.14. Not bad. But I can't say that I would have stayed in that long. You know, I could have just hit my target, got out. You don't know, because I'm not going to play Monday morning quarterback. Okay, should we look at any more? Let's look at a few more. It's only 9:16. Let's look at a few more. GS. I don't even know who GS is. All right, but let's take a look at GS. 14th. Okay, the opening was 204. The high of the day was 211. And looking for a 65-cent move. Okay. Thank you very much. From 204 to 211, that's a $7 move. Yeah. Okay, thank you. However, I got a sneaky suspicion that the yield would have been too low. So let's quickly take a look at that and see if that even made it. That was GS, wasn't it? Yeah, GS. Get out of there. Let's put GS in here. Reset. Hit GS. Okay. I can deal with that. The average move, 2.5, 3.2, 3.2. Okay, 3.5 days to make your target. Okay, I don't mind that. 209, 209. Yeah, and I thought so. Okay, the closed at 209. The high was 213. The low was 138. It's got a 1-year target. Okay, here we go. This is what would have dissuaded me from getting into this one. Okay, it closed at 209, and the high for the year was 213. The low for the year is 138. And look what they have for a 1-year target. I'm going to buy this at 209, and hopefully in a year it's going to be 194. Why would I do that? And if I get stuck holding it, I'm going to get a 1.23% yield. Granted, it had like a $7. Was it $7? Yeah, it had a $7 move. That's great. But do I want to hold on to it for 1.2%? No. Because these are the answers these are questions you have to ask yourself before you even get into it. Do I want to hold on to a stock that's going to pay me 1.23%, and in a year the analysts think it's going to go down? Okay, top it off. Let's see what the chart looks like, just for the fun of it. I already know I wouldn't do it because those two numbers don't look right to me. I'm all about the numbers. Okay, so now 10 years ago, I bought this thing 10 years ago. She was at 212. 212 10 years ago, and today she's at 211. How's that for a rate of return? $1 return? You bought it 12 years ago at 211 and now it's at 212? No, or is that the other way around? Okay. Yeah, last year. Yeah, 10 years ago, 212, and now it's at 211. Sorry, guys. Goldman Sachs. Oh, I didn't even know who GS was. Now I do. Goldman Sachs, no thank you. It's not paying my dividend. It's not blowing wind up my skirt. Thank you very much. Okay, so where were we? But we decided we weren't going to get that. Well, even though this looked good. Okay, so let's go back and show you how some charts can be misleading. Okay. Oh, let's stretch a little bit. Ooh, yeah, that feels good. All right, here's the one-year chart. We're looking at that again. Now, Goldman Sachs had it low back here, was at June 24th, 137. And has a high all the way up here, 213. And right now, she's at 211. Okay, high for the year is 213, and right now she's at 211. Now that is a big no-no. I don't like the idea because you're so close to the high. And a $200 stock, how much higher can it go before you make your profit? Granted, we're only looking for a 65-cent move, but really at 211 and the high of the year is 213, no, don't want to bother. That's what that chart says. Now look at the last 90 days. Last 90 days looks pretty good. Okay, you're going a little bit sideways for a couple of weeks, then a nice steady incline. Then all of a sudden here, oh wow, what happened on November 8th? Donald Trump gets elected. And look at all the volume, all these people jumping into Goldman Sachs. And the Goldman Sachs just jumps from 179 up to 207 in just a few days. Now it's all right here. I mean, come on, let's zoom in a little closer. Okay? All right? October 24th, 25th, 26th, 27th, still going sideways, nothing. November 4th, down day, 4 down days in a row. Look at this. First, second, third, and fourth. 4 down days in a row. You got the 5th, 6th, 7th was Saturday, Sunday. You open it up on Monday, the day before the election. Okay? And you have about average volume. See, it's about the same. The dark blue line in the background. It's about the same. Okay? Tuesday, election day. The volume's about the same average. And then, boom, Donald Trump makes it. And what happens if Donald Trump gets into the office, gets elected? Now, the volume is here, the average. Now, this is 100% jump in volume. Okay, the stock opened up higher. Okay, it closed at 180, 192. All right, 182. The very next day, she opens at 185, and she jumps to 193. That's an $8 move in one day. Next day, she goes up to 204, and then within a week, she's up to 211. All because Donald Trump got elected. Now look at the volume. Okay, the day after the election, all right, 2 days after the election is the highest in the volume. Okay, and the stock price hits 204. After that, the volume pulls back. See these blue lines down here? Pulling back down to normal. And then once it gets back down to normal, where's the stock going? Stock's going sideways. See that? Normal volume, stock's going sideways. President gets elected, stock jumps, volume increases, everything's back to normal, and it goes sideways. So, do I want to get into it? No, I do not. Thank you very much. Anyway, that's my analysis on that one. But one more key factor. Let's take a quick look at what it normally does. The seasonality for Goldman Sachs. Towards the end of the year, she goes sideways with a slight dip. Yeah, I'd say just sideways. From here, just sideways. No thanks. There's too many stocks out there. I mean, you got 89 of them to pick from just on Tuesday. Let's look at the numbers again, just to show you how crazy it is. Okay, Monday the 28th, which is yesterday, 80 stocks. Tuesday, 89. Wednesday, 58. Thursday, 35. And Friday, 9. So that's 80, 169. Ooh, 169, 220. 255, 260, 264 stocks just for 1 week, all paying dividends. How are you going to pick? I'm seeing what Goldman Sachs has to offer. I say no, thank you. No, too many other ones out there. That's Six Flags. Yeah, Six Flags Entertainment. Let's see what they look like. Now, Six Flags is paying 64 cents. Okay, you get the high up here for 62, the low down here at 45, and let's see what it says on the 14th. The 14th, here we go. Now the 14th, we would have gotten, if I'm just saying if we'd gotten in, it would have been 56.11. The high of the day is 56.48. Look for a 64-cent move. Didn't make it that day. 56.11 and 64 at 75, so that's 56.75. So day 1, nope. Day 2, nope. 3, nope. 4, nope. 5, nope. There you go, right there. 1, 2, 3, 4, 5, 6. 6 days. 6 days would have been out with your target. But would you have gotten into it in the first place? Let's take a look. Okay. Back last year this time. Sideways, little dip. Up climb. Sideways, little dip. Going up, up, up. Yeah, see, since September, it's a nice uptrend. Look at that, nice. Yeah, I'm going to say, based on this information, yes, I would have got it. I would have got it based on this information so far. But let's take a look at other information. You have to have all different types of information before you make up your mind. Seasonality, I'm going to say yes, because you look, towards the last quarter, because a nice steady incline. Not huge, steady incline. That's good. So you got it there. Let's take a look at the chart over here. Okay, now that is interesting. Okay, it only has 6 years worth of dividends. So Six Flags has only been paying a dividend for 6 years. Do you want to invest in that or not? Totally going to be a call up to you. But it has an average of, I'd say, right around 2 days. Okay, the high of the year is 62, the low of the year is 54. Right now, closed at 56. It's got a 1-year target of 63. Everything looks great. They're paying a dividend of 58 cents, and the yield is 4.4. Just on this alone, those are good numbers. 1.2 million shares traded on an average of 30 days. And let's take a look at what the chart says for Six Flags. Over the last 10 years, what are we looking at? And I'm going to say yes. Way down here at $10, and you're here at 57. Come on, that's a no-brainer. Six Flags, it's a pretty well-named company. Most people know it. Last 10 years, you have 5. Wait a minute, what was it? Back up here. Where is it? Look at the change, okay? The last 10 years, 583% increase. That's pretty darn good if you ask me. Anyway, Six Flags I would have gotten. And what did we say for Six Flags? Let's get back to standard and the 14th. Okay, now remember, you would have got in on the 14th at the opening, which is 56.11. Okay, looking for your 64 cents, 56.11, it's 56.75. That would be your new target. You got one down day, first day, second day is a down day. Now, I like to go 4 or 5 days in the red before I jump out, before I jump ship. This is 2 days, so you would have been in, and it's going sideways, goes up a little bit more. And then I believe, there you go, you would have been out on day number 5. Yeah, 1, 2, 3, 4, 5, 6. 6th day. All right, so that's not bad. Let's look at pi. What's that, P2? I don't know. Quick chart. Interesting. Let's see how this one plays out. You get the high of the year up here, 106. The low of the year down here, 67. Now it just goes down with a small gap here, down with a big gap, down further, another gap here. Hits bottom at 68. There's a nice incline here, sideways a little bit. You could call this profit taking because you have the big spike there and a big drop. Goes sideways for a while, but back up again. Could be more profit taking here. You don't know. Honestly, don't know. Do I really care? No. At this moment, I don't. Let's look at the last 90 days. Okay, she's going to drop with a gap. I like these gaps because they have a tendency to fill. Now we're coming into here. Would I have gotten this one? I honestly don't know at this moment in time. But as of the 14th, well, 14th. All right. Based on this, okay, and I'm not saying I would have gotten this based on what we already looked at. Had I bought this on the 14th, I hadn't said I did yet, we're looking at the opening of $90.50. The high of the day was $92.50. That's a $2 move. Would we have hit the 55-cent target? Yeah. You would have gotten in at the opening, which was $90.50, and you would have gotten out at the high, which was $92.55. So you would have gotten out on the very first day. But before we say that, let's go and look at a few things before, and think, would we have gotten in this in the first place? The seasonality, definitely not. Look at that. Buy something and it tanks towards the end of the year, that's a no. Okay, let's see what what the software says. Who are we looking at first of all? PII, all right. Let's go here. Reset that, get rid of that crap, PII. Hit go, and oh my goodness. Like I say, you don't know until you know. Alright, so I have a few minor flaws here. Okay, now this is one of those, it's going to make you really second guess what you want to do. All ones all across the board, that looks great. It closed at 86.84. The high of the year was 106. The low of the year was 67. These three numbers right here look good. What doesn't look good is the 1 year target. They're targeting it for 83 bucks. That's a almost $4 drop. What would I want to do that for? Okay, the dividend is great, 55 cents. The yield is good, 2.4, and the volume's good. So you get most of these numbers looking good, except for this one. Why would I want to buy a stock if the analysts say it's going to drop? Okay, let's see what this chart looks like. Everything's saying yes, except for the 1 year target. So let's see what the 10-year chart looks like. Okay, so this is going to be a little iffy. So 10 years ago, we could have got it at $23. Great that it's at 86, but look at this. It went from 23 all the way up to 156. Okay, now for 156, you get a 50% drop in value in how many years is that? In 2 years. So that could be your answer right there. Although it hit its target, although it has ones across the board, Okay? This is why you need a lot of information in order to make up your mind. Okay, so this all looks great. All right, ones. I don't see all ones that often, but when I do, it makes me want to buy it. So you get all ones, that's great. However, all these other numbers look great except for the 1 year target. Okay? The chart confirms. Where did we go? Oh, it's right here, darn it. This chart. All right. Confusing. Get out of there. All right, here we go. This chart confirms that no, I would not want it. Even though if I look at the whole 10 years, it was $23 10 years ago. Now it's like 300% return or 270% return. That's great. But up here, it was 569% return. Okay, from here to there, it dropped quite a bit in value. So I'm not 100% sure. It's one of those iffy ones. But, you had a whole bunch of companies to choose from on that day. Let's look at the other piece of software and see what that says. PII. All right, let's get rid of that. Let's just go to the average. Okay, this would have given me a better indication whether I would have done it or not. Even though I have ones all across the board here, those are nice. Okay, by 10 days prior to, she goes sideways up a little bit. Okay, and then that is a slow decline up, and she basically goes sideways. Too many companies to pick from to do what I'm going to say is wishy-washy. This is a wishy-washy stock. Ones look great. Going sideways with a little bit of downtrend. No, thank you. I'm going to pass. Okay, so let's get back to what we were looking at. Okay, I believe that Kellogg? I don't know. Could be. Kellogg's, yeah. Okay, so Kellogg's, we're on the seasonality at the moment, has an uptrend for the end of the year. So would I've gotten into it just based on the uptrend? I'm saying yes, because fourth quarter's nice uptrend. I like that. Let's look at the other parts of the chart and see if we would have done that. Let's go back to standard. Okay, the high of the year up here, 87. The low of the year way down here at 68. The last 90 days, a slow decline. Slow decline makes you want to say no, doesn't it? However, slow decline is working into that little uptrend towards the end of the year. So let's take a look at the 14th. 14, right there. Is that right? Okay, so here's the 14th. Opened at 72.43, and the high was 72.96. Okay, so 52 and 43 makes 95. There's a slight possibility. I'm saying ever so slight, because if you got in at the opening, the 72.43, and your target price was 72.95, and the high for the day is 72.96, there's that slight possibility you could have got filled at 72.95. But it's so close to the top, you don't really know. However, this one, it would have been out the very next day anyway. It opened at 72.73, hit the high of 73.50. So it would have been out the very next day. So that's only 2 days. I can deal with that. Let's take a look at what the other charts say for Kellogg. All right, slide up. Let's slide down a little bit. Okay, 1.5, 2.8, 5.3. Let's look at the numbers. Closing price 73, the high low. The high is 87, the low is 68. This one doesn't have the 1 year target on it. And it's 900,000, it's not even a million shares. let's look at the average. The average is you buy it, goes sideways, but from the dividend date, a nice slow upward trend. Now, I wouldn't say really slow. That's a nice steady upward trend. So that's based on this, yes. Let's take a look at the other chart right here. Okay, go. Okay, now this answers all your questions. Well, this answers my question. Okay, 5 days, 5.7, so 6 days. I can deal with 6 days. Close at 73. The high was 87. The low was 68. It's a 1-year target of 82. Not quite the high, but it's nice there. It's a nice move. It's a $9 move between now and the projected high for 1 year. The dividend is 52 cents. I like that. And the yield, 2.8. I like that. And it has volume of 1.6 million, close to 1.7. So Kellogg would have been a definite yes. And we made it anyway, so that's always good. Yeah, see the 14th is here. The opening was 72.43, and look at the high was 74.66. Not a bad move on a under $100 stock. I'm not quite sure if I want to look at any more because, you know, you see where it's going. Out of all these, everyone made it except for one, but we had a few of them that we wouldn't have got into. Although Goldman Sachs did hit the target for 65 cents within the the 5-10 day period, I wouldn't have got it only because the numbers just didn't look right. There was a few other ones that I didn't like, but you can see that. So, what are we looking at today? Today is, let's go back to my trusty calendar, the 29th. Okay, so 5 trading days from today would be the 7th. Why the 7th? Because I can't do anything now at 9:40 at night, so it would be opening tomorrow. All right, it would be the 30th. So whatever I do, whatever trades I put on tonight, I'm going to be looking at the opening price tomorrow. Okay, so 10 days from tomorrow would be, it's not the 7th, would be the 14th, December 14th. Okay, so let's look at December 14th. And here we go. So for the week of December 14th, Monday we have 19. Okay. There you go. Look at that. PSA is $2. Nice. This is always tough. On Tuesday, 87 stocks. How do you pick out of 87 stocks? Wow. Okay, look at them all. I actually have a position in CMA. It's only paying 23 cents. Okay, so Wednesday, like we said, the 14th of December, this is what we're looking at. 45 companies. DIN, CCI, ISIG, QTS, TCPC. I don't even know some of these, but let's open some up and see what we're looking at. DIN. Oops. Okay, this is what you probably want to know. Based on this information that we're looking at now, do we want to make a play for a 97-cent move on DIN? First of all, the stock's at $85. The high out here at 98 for the year, and the low way down here at 75. Where she is now kind of falls into right where we want it. The 90 days, last 90 days, here we go. Look at this. A nice upward trend moving sideways, and then, oh, look at that. Old Donny Boy gets elected on the 8th of November, and everything shoots up. Maybe it's going to settle here and go sideways for a little bit. I don't know. Presidential elections have a tendency to screw things up. All right. That being said, let's look at the seasonality. Oops. The seasonality for this company. All right. An upswing. It's right here. Little dip, then an upswing. It's a possibility. We have 45 companies to choose from. This is a possibility, so let's see what DIN says. DIN. It's a no. I can tell you right now, 3 years worth of data, no thanks. Now, I'm not going to discourage you from doing that, but for me, no thanks. Okay, so they have 3 years worth of data and they're averaging 2 days. Okay, close at 86, high was 98, low was 75. We already knew that. The 1 year target of 92, that looks good. The dividend, 92 cents, that looks great. The yield is 4.4. Okay, here is a big fat no. 167,000 shares. That's all that's, it's kind of like dancing by yourself, being the only one on the dance floor. No thanks. But take a look at the chart just to do a full round figure of this. 10 years. Okay. Now here's a question you need to ask yourself. All right. 10 years ago, December of 06, the stock was $52. Okay? Now she's at 85. That's a 61% return for 10 years. Why didn't they pay out any dividends? 08 to 13 for 5 years. 5 years they didn't pay out dividends. Why? Why is that? Interesting question. Would I do dine equity? Nope. Sorry. That's just me. You might want to do that. That's totally up to you. Oh, I got one more piece of software to look at. This one. And what was that? What was it? What was the, there it is, DIN. This ticker symbol. DIN. Plot the dividend. No data. You see that? Why does it say no data? Because the date right here says the 29th, which is today's date. Okay? But we want to look at the 14th of December. That's when they pay their dividend. See? Now let's plot it. There you go. Not enough data to look at. Sideways, up a little bit, drops, spikes, drops. No, there's no consistency. I don't like it. So let's go back and see what we're looking at. Who's next? Okay, CCI. More on CCI. Quick charts. Ooh, okay, here we are right now. Now, as you can see on the seasonality, a nice steady increase. Look at the way the stock moves. A nice steady increase all year. At the end of the year, still nice and steady. What does it look like for the past year? Standard. Okay, the high of the year up here at 102, the low of the year way over here at 76. The last 90 days. Slow downtrend. Doesn't make me happy. Okay? And what happens right about here? All right, this is a new one. Okay, the election right there. On the 8th, Donald Trump gets in, the stock drops. Drops again, drops 4 days in a row. Then what does it do? It finds itself back to normal right in here. So there's a good possibility, we can see what the other charts look like, that this thing's, remember the seasonality, is showing that it's, where are we? Is that she's going to move sideways and then trend up a little bit for the last part of the year, which is what we want to look for. But let's see what the other software says. And we're looking at CCI. Same date, all right, 2/14. CCI. Ooh, nope, we have to say no. Do you know why? Look at that. 2 years worth of data? No, thank you. Look at the dates, average 25. All right, so I don't like that at all. Now, I'm going to see if I got any questions, because we're getting to the last 15, 20 minutes of the show, and I want to see if anybody's asking me any questions. So where would that be? That would be right here. And I have No questions. That's cool. Anyway, we got 50 minutes into this. The last 10 15 minutes I want to save for questions, and nobody has any, so I am going to go back to here and wrap it up. All right, so today I'm going to do another quick email and send people out what the rest of the week's going to look like. So you got 45 stocks for tomorrow's consideration, and then Thursday we have another 6, and Friday we got another 12. So that's 50, 67, 63. Is that right? 45 and 6 is 51, and 12 is 63. So we had 63 companies to go through for the rest of the week. Look at that. Tupperware, Tiffany's, I know those. Horizon, Glad, Gain, Land. Oh, Land we're not going to do because it's only 4-cent dividend. Don't like that. Anyway, this is James from the 10-Minute Trader. You guys want to get access to any of the software? Well, this is the thing. Swim software is easy. You can get access to that just through Thinkorswim. But this software I created myself, which allows you to take a look at what the stock looks like on that 90-day period between 10 days prior to the dividend and what it's going to look like for the next 90 days on average. That's software you can only find at the 10-Minute Trader. And this software here, basically the same thing. Just put the stock symbol in, hit go, and you're good to go. And it gives you 10 years worth of data. IBM, love them. Okay, look at ones all the way down. But that doesn't make me happy. Close at 164 instead of 1 year target of 157. They don't have the dividend now, so don't trade this one. This was just showing you what the software looks like. Back to here. This is our email that gets sent out twice a week, showing who is going to be paying when. This one got sent out, I believe, on Sunday night, so you would have received it first thing Monday morning. You need to go through and find out what these guys are doing. Because look at this. Just for the dividend capturing strategy, 100% of the time, these 8 companies, 100% of the time have hit the target, got the dividend. Okay, look. ALOT, it's only a $13 stock. The dividend is 7 cents. It's a 2% yield, better than the banks. That's good. But 100% of the time, you bought it at 13.07. Your new target is 13.47, and you hit it 100% of the time within a 10-day period. Does it have options? No, I might not do it because I like trading options. But all these numbers have some kind of meaning to them. EE, $46 stock, 31-cent dividend, 2.68% yield if you're going to hold it all year. If not, you're going to get out within a 10-day period at 100% of the time based on historical performance. Is it going to work this year? I don't know. I can't guarantee it. I'm not saying it's going to. I'm not telling you to do it. I'm just saying, based on history, this is done it 10 years in a row. It's good probability that it may do it again. Anyway, this is James. I'm going to sign out now. And hopefully we get this thing interaction going so people can actually answer questions. All right, you guys have a great day, and I will catch you on Thursday when we do another show. Here we go right here.